다음 발표로 넘어가 보도록 할 텐데요. 저희가 준비한 다음 순서는 INX의 예조담 자본시장부문 부사장님께서 준비를 해주셨습니다. 다만 일정상 현장에는 함께 해주시지 못하셔서 저희가 영상으로 대신 좀 내용을 전달 드리도록 하겠습니다. RWA 토큰화, 미래를 이끄는 성장 동력에 대한 내용 영상으로 바로 만나보시죠.
안녕하세요. Thank you very much to the Edeilli team for inviting INX once again to the Sto Summit, an event that I know has really done a lot to bring thought leaders together in Korea, to invite international speakers, to share stories, to share strategies, experiences. So I really want to commend the team for putting this event together. I want to thank you all for coming and for joining this panel, this session, where I will be talking through some of our experiences as one of the pioneering leaders in the tokenization space of real-world assets. INX has been around for a good 7 years now. We have seen many different iterations of regulatory approaches. We have seen many different pilot projects, and we're starting to see some more mainstream players coming into the space. So there's a lot that we can share, and we want to share with the Korean ecosystem players. And so I hope that my presentation here will be useful for your teams to build their own projects and their own platforms and work with the governments and the regulators and so on. So I'm going to get right into my presentation right here. And what I want to talk about today are effectively keys to success for real-world asset tokenization. Ultimately, this is what we're all working towards, which is to take these assets and bring them on-chain and bring about all these additional benefits that come with. So it's easy to sort of kind of break down the challenge into these three broad areas because they each one being as important as the other, and the fact that all three of them need to come together in unison for success in this space. And this is really something that has to happen globally across the financial markets, across, geographical lines. If we continue to drive the ethos of financial inclusion, then this is something that has to happen beyond the traditional financial centers of New York, London, Singapore, Tokyo, and so on, but really needs to spread out across the world, across the demographics, across the age groups. So these three factors or pillars really need to work in unison, like I said. The first one being the regulations, the markets themselves, right? The markets generally in the financial services industry have evolved over time. We're talking of 100+ years, and there have been significant jumps in technological advancements, in the way assets get traded, and therefore in the way these regulations by the authorities have been designed around protecting investors, around making sure there's transparency around what people are investing in and what the risks are, and so on and so forth, but also how the platforms themselves, the platforms who offer these assets, how they operate, how they have to have compliant frameworks, anti-money laundering policies and procedures, the way they staff these platforms, right? So, and then the assets themselves, as I said, the risks related to the assets, but how assets get custodied, settled, and so on. So the regulations are always going to be a critical component of, a successful tokenization of real-world assets, which is what we're working towards. And then I'll talk about the trading platform, the application, the access layer, right? How are people seeing these assets, reading the risk factors about these assets, downloading fact sheets, being able to anticipate, things that might go wrong with the assets as a good balance against the upside, right? How can people fund their accounts using what platforms, what systems? Can they trade in multi-currency accounts? Can they trade using crypto? Can they earn, stake, yield? All of these things that we are all working towards bringing onto trading platforms in a Web3 context. And then, of course, the assets themselves, whether it's cryptocurrencies, utility tokens, or tokenized equities, bonds, you name it, precious metals, classic car collections, all of these assets out there, some that are highly illiquid, like real estate, that all need to start getting fractionalized and put on chain. So these are sort of the three really key areas that we think really need to come together for that sweet spot in the middle to really appeal to investors, and not just institutional investors, but also retail investors. When we look at success and what would success look like, if we said, let's look 5 to 10 years down the line, then of course it's the fact that this has now scaled globally. People in Brazil or Uganda or Cambodia can say they have access to blue chip stocks, to NASDAQ listed equities, to equities that are listed on the Korean stock exchange, and that they can do this without significant cost and hurdles, ideally from their mobile phones in their living rooms. So when we visualize this future, to kind of define it into its individual pieces, is the market fit, right? Is there a market out there for these assets? And is the solution of how these assets are being made available, is it a good fit for this market? Like I said, if somebody in Cambodia can pick up their phone and they can buy some NVIDIA shares, and there's that demand and there's that satisfaction and there is that ability to invest and create a future for that person and their families, that's a great market fit, solving a real problem. And that's just one example when we talk about, tokenization of equities. Some of these countries have cash preservation challenges, right? So they might have currencies that are undergoing significant challenges, devaluations and things like that. So they might just want to buy government bonds. The idea that there is a choice of assets available to people in these far-flung countries or to institutions that are looking for very quick sort of settlement, this is what we call market fit. Regulation, trusted framework, meaning people no longer think about RWA as this risky crypto thing. Rather, there is now clear regulations that also transcend international boundaries. So the fact that, an asset can trade on a European platform and trade very similarly, if not identically, on an Asian or an American platform, and have sort of the same or very similar regulatory guardrails around it. This is going to create a huge amount of trust that is needed in the space. And then there's the usability, as I said, the fact that the ability to invest and hold these assets and maybe use them as collateral, trade them, is not a hugely complex undertaking. And then finally, there has to be revenue potential for the service providers in this space. There has to be profitability. If we talk about disintermediation of the traditional chain or supply chain, if you want to call it that, of investment products, well, those who are going to be providing the service are going to be looking for some kind of profitability model, and this is pretty much a given. So these are sort of the factors that you could break down success into these individual components and sort of look forward in that sense. This is just something I kind of played around with to say, if you had to score, out of 10, where these individual factors, success factors are today, I would say this is a fairly reasonable starting point. Market fit, we're not quite there yet. Apart from the fact that a lot of people in some of these economies that I'm describing, these developing countries, are not trading traditional markets today, right? It doesn't mean suddenly they will all trade markets if markets go on-chain, right? There's a lot of work that has to happen regardless of if these assets are on-chain or not to say, there's a great market fit for RWAs, out there in the world. And if you look at established institutional players, whether it's family offices or hedge funds, pension funds, or you name it, I would still give this a 5 out of 10 score in the sense that there's a lot of risk reporting information that has to be available to institutional investors before they will touch an asset. There's the custody challenge and so on. So I think 5 out of 10 is a reasonable score for the market fit. Regulations, 4 out of 10, a little bit less than half, simply because the largest financial market in the world, the United States, is yet to publish its own comprehensive regulations. So the market structure bill, which we're all anticipating, we think will come out before the end of the year, that's going to be a huge step. That would probably push this score to something like a 6 to 7 out of 10. We know Singapore, Hong Kong, the EU has made some huge strides in regulating digital assets, Switzerland, the UAE. So with the United States also joining this group, I think we'll go into the higher figures. Usability, 7 out of 10. This is really something for our design teams, user journeys, product designers, right? User-friendly interfaces, workflows. These are things that I'm fairly certain can be resolved very quickly. For example, taking the complex process of setting up a wallet with these 12 or 24 word seed phrases. If you abstract this wallet infrastructure from the user experience and simply have a login, maybe with some biometrics and the ability to recover a wallet with, some of these biometrics, and you remove this 24 word seed phrase, you have significantly increased the usability of the platform. So I think this is probably not too complex to get to an even higher score. And then finally, the profitability for the players in this space, right? The exchanges, the infrastructure providers, and so on. With the adoption and the user base, the institutions that will pivot to digital assets, I think that's where the profitability will come in. And therefore, this is one that really has a dependency on all of the other factors working out. So what are the challenges today, right, that are still hindering us from achieving these goals, these successes? And again, these are systemic things, right? A lot of these are dependencies on other evolutions within the space. So let's take liquidity providers. Today, if you open up your traditional investment app, like the Kakao app, and you want to go and buy a stock, whether it's a US listed stock or a Korean listed stock, there is a deep book, there is deep liquidity, and it's something the investor doesn't really think about. Maybe high volume institutional investors will be very interested in the depth of the book and the quality of the pricing. But generally, for most of the traditional stocks and equities out there, you will have a lot of liquidity. There are thousands of liquidity providers that sit between the investor and the exchange. And there's a whole interconnectivity of APIs and market data and execution flows. It's a pretty well-established infrastructure with providers. Now, take digital assets, and you have a lot of these liquidity providers quickly pivoted to add cryptocurrency trading, utility tokens on the centralized exchanges. They were very quick to add this to their portfolios because there was a lot of volume going on in the space of cryptocurrencies. Cryptocurrencies trade very similarly to foreign exchange. And so there was not a huge shift there for the technology and the skill sets of these liquidity providers. But when you look at real world assets, whether it's bonds, real estate, tokenized equities that are being traded on traditional platforms, and now somebody's trying to take the traditional asset and convert it into a digital version thereof, you start to introduce a new type of complexity to the liquidity providers. It reduces their margins. And so they're not there yet. There's also regulatory challenges around how a liquidity provider is defined, market maker versus liquidity provider. So this is a key element of success that has to evolve. And at INX, we have always kind of reached out to every liquidity provider out there, offered them partnerships on how to come into the RWA space, work with us, develop the pricing engines, take our APIs, consume the market data, look at how to provide the services in the RWA space. Moving on to custody. Custody is another interesting one that I've hinted at, the complexity of seed phrases, wallet infrastructure, this kind of risk that people and investors and institutions have in mind, which is, not your keys, not your assets. And if you lose the keys, you could lose the assets forever. forever. This is something that we expect significant improvement in the very short term, at least in the context of the United States, where we expect that this upcoming market structure bill will allow for example, broker-dealers to custody on behalf of investors. And this is something we anticipate, right? I'm not saying it's going to be in the bill, but we expect some significant lowering of the barriers around custody. Another example might be who can act as a trust, who can act as a custodian with an existing license, maybe a traditional banking institution, or as I said in my earlier example, as a broker-dealer. So the custody element is key, and we look forward to developments in that space. Lastly, distribution. Maybe if we think about this in the context of the primary issuance, the primary offering, right, the investment round of the asset, raising that capital. Let's say an issuer is looking to access accredited investors. Can they do this easily across jurisdictions? And they raise from professional investors as they are defined in Singapore, and at the same time raise from accredited investors as they are defined in the United States. Are there distribution partners that are willing to collaborate together, share in the brokerage fees, and effectively make these assets available to much more global audiences? So these are some of the key challenges that we see in this space. When we look at the life cycle, more or less, of, if we kind of put all these different factors that I've been speaking about into a life cycle, well, you kind of have the regulations first, right? Institutions are not going to come in fully until they know that they're going to be working with a highly regulated environment that will protect them as they invest heavily in this space. And with the institutions comes the big money, therefore the liquidity. And then you can also serve retail very easily because you now have this sort of democratized access ethos that is coming with Web3, right? So even though we expect to see a lot of assets geared towards institutional players, we're already seeing a lot of these very large asset managers, like take Hamilton Lane, for example, who have taken their infrastructure fund. This is the Hamilton Lane example. They've taken one of their flagship funds. It's the infrastructure fund that was typically only available to high net worth and institutional investors with very high minimum investment sizes, and they have made this available through a distribution partner, Republic, who INX has been working very closely with. And so now for $500 minimum ticket size, a retail investor is able to buy into the infrastructure fund. So this is a good example of how the life cycle, as it works for the institutional players, because of the on-chain rails and the simplification, the disintermediation, the lowering of the cost and the barriers to entry, we will see institutions driving liquidity and being able to onboard retail investors as well. And ultimately, bringing in retail will add to that liquidity, will add to the AUMs in question. And I think we'll have a much more interesting market there, where you'll have a cap table that has big names, big institutional investors, corporate treasuries, pension funds, and then, mom and pop and granny and grandpa, right, on the cap table. So we look forward to this life cycle sort of evolving over time. When we look at, INX's experiences, everything that we have done over these last years, and it's been quite impressive. We have helped issuers raise capital and issue tokens to investors. Some of these issuers have paid out dividends or continue to pay out dividends on a regular basis, and we facilitate those dividend distributions on chain. Some of these tokens are listed for trading on the secondary marketplace, so that investors who didn't participate at the primary offering can trade on the secondary marketplace. We have facilitated projects in all of these disciplines that I've just described there. We've also tokenized blue chip stocks, Microsoft, Nvidia, Tesla, and made these available to anyone who has a phone in their hands and is able to onboard onto the platform. So we speak with authority, success factors that I described just there. This is something I'll leave you with. You want to take a photo, just something to kind of look at, where we see how we have positioned ourselves and worked towards solving the problems. And this is something that you guys can take on board as you build your own platforms, as you apply for your own regulations. We always worked with the regulators from day one. We raised capital ourselves through a registered IPO with the United States SEC, reporting into multiple regulators at federal and at state level. And that's from a regulatory point of view. We have a platform that caters to a very broad spectrum of investors. You can call it a super app. We call it INX One. It's the platform where you can invest in primary offerings. You can get dividends paid out to you for assets that you hold. You can trade crypto. You could on-ramp using crypto to trade security tokens and convert back and forth between the various asset classes. It's a self-custodial model, which is very interesting when it comes to the future of collateralized real-world assets. So the view being an investor on INX can buy a high-quality asset and hold it in their own wallet and then take that asset to a DeFi application, potentially borrow against that asset that they hold. Obviously, this is pending regulations, but we've built an application that can really cater to all of these various use cases. So we have just launched a brand new website, simplifying the complexity even further. Welcome you to take a look, reach out to us. More than happy to, talk you guys through more of the experiences that we have, work with you on helping you achieve your own goals. Welcome any sort of collaboration opportunities with your teams. It's been an absolute pleasure to again present to you guys and to share how we have come a long way from the early days back in the ICO days to where we sort of set out to start to build this digital assets ecosystem and to share our journeys. So please, as I said, feel free to explore our offerings and reach out to us for further collaborations, for use cases that we can review together, and ultimately for guidance on how to operate in a regulated and trusted manner. So I thank you very much and wish you a successful rest of your conference.